So we're almost done here. And in the last slide, we're going to talk about a really exciting thing called Section 1202, qualified small business stock. This is a tremendous part of the tax code. It is not very well known, even amongst the financial planning and tax advisory community. So it's really, really important to make sure that you are working with a financial advisor and an accountant and really have the legal advice of the whole team to manage the strategy for you. So with Section 1202, if you qualify, you have the potential to sell all of your stock holdings and recognize no taxable gain. So it's tremendous. It has happened before, again, where we've had a new client come in and we were able to identify that they actually had stock that was likely going to qualify for this, but their previous financial advisory and tax advisors had not made any mention of it or wouldn't opine about it. So finding this out and actually getting them to work with another professional who could make that determination at that point would have saved, about 7 figures in taxes alone. So this is a really, really incredible opportunity. And it's just important that as the taxpayer, you're making sure that you understand whether or not you qualify. So at a high level, the gain exclusion has 2 components. There's a $10 million cap, which is a lifetime cap per taxpayer, so per person and per issuer. So if you're a serial startup employee, that cap could apply to all the different companies. There's also an annual limitation of 10 times basis, and we'll explain that a little bit more in a minute. So every year, the exclusion is evaluated on both of these terms. So once you exhaust the $10 million kind of one-time cap for that issuer, you could still exclude some of the gain by that 10 times your basis. And that's calculated annually. Most of the folks that we work with have such a low basis that second part of the calculation doesn't really offer that much value, but it's still good to be aware of. Another thing to be aware of is that states may have their own qualified small business stock rules. They may conform federal, they may ignore it. So it's, again, really important to work with a CPA and a tax advisor to discuss your situation. So how do you qualify? Here are some of the key requirements. It's not all of them. Making sure that you get that documentation in place is pretty complicated. We'll talk about that more in a minute. But just as a high level, the stock must be acquired directly from the company, and that has to be a domestic C Corp. At any time right around when those shares were issued, the company's gross assets has to be under 50 million. So we talked about the early exercise strategy. This is one of the reasons to consider that, is because if you wait, then there is a potential that that company's gross assets would exceed that $50 million mark by the time you actually exercise your stock, which is what's important in determining whether or not you would qualify for Section 1202. There's a 5-year holding period. Again, it's the date that you acquire the stock. So it's really important that you do that 83B election or just make sure that you're vested. 80% of the corporation's assets must be used in qualified trades or businesses. You can look it up exactly what that is. And any significant stock redemptions can disqualify the shares from meeting the requirements. So there is no IRS checklist to make sure that you've documented everything or to determine whether or not you qualify. This is something where if you're ever audited, you need the documentation to substantiate your claim. So that's why it's really important to gather the documents as you go. Because if you wait till you think you've already met this 5-year holding period, then you're trying to go back a minimum of 5 years to justify that gross asset, the stock redemptions. I mean, all of these things, there could be turnover at the company. We've seen it. It can be really hard. So as a best practice, we always suggest working with a tax attorney, working with a CPA and your financial advisor to understand what types of documentation you might want to meet and actually get a determination. If you can't get that documentation, you're going back really far back into history, consider doing it's called a QSBS study, essentially hiring a tax professional or an attorney to work with the company and really try and formally document this. Carefully monitor your own holding period. It's up to you as the taxpayer. Another thing to think about here is there's been many legislative attempts over the years to curb or repeal qualified small business stock. The last one was about 18 months ago, was at the end of 2021. So as you think about when to diversify, how much to sell, really do keep in mind that the tax code is only in place for today, really, because they change it constantly. So those rules can constantly change, and you don't want to be making decisions on the future based on the current tax code, but you assume that it's going to stay forever because they change the laws. And we already know that in 2026, the current rates are set to expire.